Short answer. Gary Shilling's long-term forecasting record is unusually strong on major macro turning points, especially recessions and deflationary waves, but he is often early and his timing can be off by years. He has correctly anticipated several major downturns, including the 2008 crisis, but his persistent bearishness means some calls arrive before markets actually break. 1. His major correct calls, the ones that built his reputation, 2008 financial crisis. Shilling is widely credited with being one of the few mainstream economists who publicly warned of the housing bubble and the coming collapse. Multiple sources note his correct prediction of the 2008 downturn. Late 1960s recession. He famously forecast the 1969-70 recession while at Merrill Lynch, so accurately that he was fired for contradicting the firm's bullish stance. Deflationary trends, 1980s to 2000s. His long-running thesis on global deflation and deleveraging was early but ultimately aligned with multi-decade disinflation. His books Deflation, 1998, 1999, and Age of Deleveraging, 2010, were considered prescient. Early calls on major slowdowns. He has been recognized repeatedly by the Wall Street Journal, Institutional Investor, and Money Sense for accurate macro forecasts, including being ranked the number 3 stock market forecaster in 2003. 2. Where his calls tend to miss, timing, not direction. Across multiple recent analyses, Shilling is described as often early on downturn calls, contrarian and bearish, sometimes for extended periods before markets finally break, directionally right, chronologically premature, a consistent pattern noted by market commentators. This means his forecasts frequently eventually align with reality, but not always within the timeframe he initially projects. 3. His recent calls, 2024-2026, still bearish, still early? Recent reporting shows he has repeatedly warned that a U.S. recession is almost inevitable, and that the S&P 500 could fall 20–30%. His reasoning centers on frozen housing market, weakening consumer fundamentals, high valuations, slowing business investment. Outside AI analysts note his track record is mixed on timing, even though his macro logic is respected. 4. Summary table. Gary Shilling's forecasting record category assessment evidence major recession calls strong correct on 1969-70, 2008, widely cited for accuracy. Deflation, deleveraging themes, strong books and long-term theses aligned with multi-decade trends. Market timing weak to mixed, frequently early, acknowledged by analysts. Equity market crash calls mixed, often warns of 20–30% corrections, not all materialize on schedule. Reputation among peers, high-ranked top economist, cited by WSJ, long-running Forbes columnist. 5. Bottom line. Gary Shilling is one of the most respected long-cycle macro forecasters in the U.S., with a strong record on big-picture turning points. But he is chronically early, and his bearish calls often precede actual downturns by months or years. If you treat his forecasts as risk signals rather than timing tools, his track record looks excellent. If you treat them as short-term trading guidance, the record becomes much more mixed. If you want, I can also map Shilling's calls versus actual market outcomes across the last 40 years in a clean timeline.